Okay, good. So I think I am streaming. Cool. All right, so let's go ahead and get started. I'm going to let everybody else in. Hey, Red Nose, how you feeling?
What's up? Happy New Year.
Happy New Year. I am streaming live on YouTube also, and I was going to stream this live on Facebook, but I don't think it's too late for that to work out now, so I'll try to do that next week.
You look good in your little suit.
Oh,
Jumping up the box.
oh man. Oh,
Hey, we're
oh, you
almost.
talking about
What's up, baby?
the New Year's video? Yeah.
What's up, yo? Happy New Year.
Happy New
Happy
Year.
New Year. I see you setting off the New Year right.
I'm just trying, Black Abundance. I'm trying to level up. That's all.
Mhm. 1 second. I should just share. Yeah, I'm gonna share that stream button because I'm streaming on YouTube. I'm gonna share it on my Facebook. Then I guess we can get people to stream it that way also. And there's a live stream. 1 second. While we wait for the team to join. We apologize. We're not on time a lot. But no, I'd like to give like a little 5 minute grace period for everybody to join and give people some time to join. I'm gonna share this on my Facebook page, so if anybody want to share it for people to join, y'all can do so. I'm gonna share it right now. Shoot, I should have shared it another way. Yeah, that's cool because it just actually you guys are here early, so we haven't even gotten started yet. You guys here are a lot earlier, and that's good. That's a good thing. First study group of the year. Yeah, I'm just looking forward to prosperity in this year, man. I think this is gonna be a good study group though because we got a big week to cover, a lot of data, a lot of stuff that happened over the weekend, and then a lot of things to look forward to, and a lot of stuff to talk about with SPY. So I think it'll be a good study group for everybody.
Wayne and I are ahead of that game. We're ahead of that curve a little bit.
Let me see. SPY.
Oh, what's happening, everybody?
Hey, what's going on,
Hey,
Wayne?
Wayne.
Study
Very cool.
week prep. Yeah.
What's
So,
up, guys?
hey, Peter, how you feeling?
Hey, Peter.
Good, bro. What's going on? How y'all doing?
Doing okay. I just set the. I'm gonna give everybody, give people like a 5 minute grace period to just kind of pour in. And I'm also streaming this live on YouTube. So if you see the link on your on social media or anything, just share it. Other people can
Yo,
join.
what's up, y'all?
Hey, what's going on, Roman? How you
Hey,
feeling, man?
Roman.
Cool, how y'all been?
Hey.
It's a new year, man. Just trying to keep these things going, and keep things going, keep the momentum going,
Yes, sir.
you know. We got a big week coming up, a really big week coming up. So looking forward to seeing how that goes, and just looking forward to this week. So we're gonna cover a lot. We're gonna cover a
Hey,
lot.
bro, that's
And
your stuff?
and so 1 second, I'm streaming. So just to let you know, I am streaming live. I'm sorry, what you say? Sorry, you talking to me?
Yeah, the shirt you got on, bro. That's your stuff.
Yeah, it's mine.
I told him I want one.
I was just about to say that,
Hey,
man.
man. Yeah, how do we get the merch, man? What's up?
I got y'all covered. Yeah, I got y'all covered. Yeah, man, it's gonna be a good week, man. Good week. I'm looking forward to this week. And let me see, a few more. We give everybody 2 more minutes to pour in, and then we can get started. How was everybody's holiday or just weekend? Yeah, I understand that. Did anybody get in any swings over the weekend? Any trades at all? I mean, look, the swing over the weekend.
Alright.
Okay, okay.
I mean, nah, I'm still in my 340 foot. That's about it.
Oh, we're gonna unpack that today. We'll unpack that today. We are live, everyone. Just tell everyone we are live again. Sorry, guys, just trying to get the rest of the team on. Just so I can send this. I don't want to send it out again after we kind of get rocking and rolling, because you know when I get into my zone talking about SPY and the market, I don't want to stop. Cool. All right, so I just sent that link out again, and it should be about 5 minutes now. All right. Sorry. Cool. Now another thing that I'm excited about for this upcoming week is seeing you know, the Tesla delivery numbers. Everybody saw the data came out. We're going to talk about it a little bit more too. And I know, so yeah, I ain't even gonna go into it. So yeah, let's just get started. Happy New Year, everyone. This is it's our first study group of the new year. So just wanted to kind of get to it and make sure that we kind of got everybody started off on the right foot and get everything rolling, rocking and rolling. A lot of you already know me, but for everybody who don't, just some of the stuff. I've been trading for a while now, for a few years. I've been investing for much longer than I've been trading. I've been doing one-on-one coaching for a while. 1,000% return on investment as a stock investor. I mean, I'm down substantially now. I'm like probably down like over like 70K on Meta. So, and I'm still buying more shares. So yeah, it's just like, it could be a lot worse. Mark Zuckerberg, they're down like, I don't know how many billion they're down on the stock. So they bought back like 300 billion worth of, sorry, not 300 billion, about 3 billion worth of shares, 30 billion, sorry. And it was at $300 per share. That was the average cost. And you look at the price now. But yeah, you see what's happening with all the big tech. We're going to kind of go into that today also. And yeah, it's a lot going on, man. But yeah, again, so I've been doing this for a while, and we're just going to jump right into it. I don't really like talking about that stuff a lot, but yeah, so, but yeah, like I was saying, man, 5-year option trading vet, former senior infrastructure operations analyst for T. Rowe Price, right? I work directly on the trade desk floor with the traders and some of the best traders in the state of Maryland on East Coast, but you know, and I've been consistently profitable as an options trader for the last few years, which is good because you can have good days and good weeks and good months, but to be able to say that is a good thing, right? I've coached over 200 students, and we just, man, we doing this, man. I'm a Meta bull. Everybody know that. I told you I'm in a hole with Meta right now, and that's okay. But you know, I'm in it for the long haul, and so let's go. So for the agenda for today, you know, obviously we're gonna go through the disclaimer. We're gonna hit recap questions. Market sentiment, Tesla delivery numbers. We're going to look at the sectors. We're going to get an oil sector update. And that's about it. All right. So by watching or reading this, you're saying that you understand the following. I'm not a financial advisor, and this is not trading advice. There is significant risk associated with options trading, and I'm not liable for your wins or losses if you choose to act on this information. Look, this is the first time, right? I tried to just like not look at the slide and just read it. I know it, but it's like, it's funny because when I read it, it's like robotic. All right, so yeah, forget the flow of the week. We're gonna get right into this because I wanna go to the stock flow because the options flow don't really matter right now, and I'm gonna tell you why. So we got economic data. Let's just go. Let's start right there. Let's get right to it because again, this is a short week. The market opened. The market's closed today. We're going to get right into it. So we got the ISM manufacturing PMI information that comes out at 10 a.m. on Wednesday. On Tuesday, we got some PMI data coming out too. But this is the thing right here on Wednesday. This is what's so crazy about Wednesday. We got the JOLTS data on Wednesday too. Now keep in mind, remember the last job openings report that came out. It was good. It showed that we actually had more jobs. It was less job openings than they filled a lot of jobs. And the thing about that is the Fed wants unemployment to go. He wants unemployment above 4%. And, because again, they're still raising rates. And the reason they're raising rates is because they want to slow the economy down to stop. And to slow the economy down, they want unemployment to go up so people can stop spending, people stop making money. It sounds crazy and harsh, but that's the only way to bring inflation back to normal levels. And so it's been going up. So they have to do a lot more. So whenever we get when you see numbers that come out like the unemployment numbers and it says, well, unemployment is lower than a week before, that makes the stock market go down because that insinuates that the Fed has to raise rates higher because he's not doing enough if unemployment is still getting lower. He wants to make it worse. And for right now, and it's crazy, but it's the truth. This is what's going down. And so when we get the JOLTS, when that data comes out, it's going to be it's the November information, right? And so what's going to happen is if that data is good, and again, good for the stock market is bad for the economy right now, because of the Fed. And so we looking for that data. And because that'll dictate what the market does. But then we also got the FOMC meeting minutes. Now, remember last month. Now, everybody remember last month's lukewarm FOMC situation. So we had normally one of the most volatile events that we have in the stock market. We look forward to every 6 weeks is the FOMC Fed decision and the press conference that follows. This one was lukewarm. It was like the Fed said a lot of things, but he spoke and he was like, he was transparent, but he spoke in riddles and he just wasn't really clear on one direction. He said a lot of the same things, but he wasn't too hawkish, but he wasn't too dovish. And it was just like, it was a lot of unknowns. So the market kind of consolidated for the rest of the day and it kind of chopped up everything that everybody had going on for that situation. So now we got the actual meeting minutes that comes out because FOMC is a 2-day situation. It's every 6 weeks, but it's on a Tuesday and a Wednesday. So we only know what's really going on that Wednesday at 2 p.m. when the Fed comes out and gives the decision. So, we got a bunch of Fed speakers that we see talk all the time, like Bullard and Mester and all of them. These are Fed presidents of different states. And so they all come together for this FOMC meeting, and they literally go in there. They have their debate, and they all cast their vote on what they think if the interest rate increase should be, or if they should go 50 basis points, should they take it down to 25 or do another 75? And then on that Wednesday we get the decision. And so that decision, it kind of makes or breaks the market, followed by that press conference. So it's one of those volatile situations. So we don't know what happens in the meeting. There's a lot of conversation that goes on in the meeting that we don't know about, but all of that information comes out in the minutes. And that's at 2 p.m. on Wednesday. Now, another thing about this that's crazy, that's interesting, is because when that report gets released on the Fed website at 2 p.m., we're trading against a lot of algo bots. So the algos, they scan the document and they look for keywords, and the markets start just running rampant based off of that information. It's before we even know what's going on. So it's market moving. I'm not going to say never, because every time I say never, I find it. But I'll say for the last three FOMC, the last 3 or 4 FOMC meeting minutes that came out, the market reacted like in a big way. So, and most of the time it was negative. So, but the thing is, the market normally recovers in the opposite direction if it was only based off those meeting minutes. If the market, depending on what's in there, because it's only algo driven information. I mean, that's happened. They're scanning for headlines and stuff. I know this is boring stuff, y'all, but this is important because at different dates and times, if you're in a trade, let's just say you're in a trade because you took a trade and you don't know what's going on, or you just tell your family, we're going to go to the beach this day. You got the grill out there and everything, but you didn't look at the weather to see that there's a big storm coming. Most people check the weather before they go to the beach. So you got to check, economic events before trading, because you can use it as a catalyst. We like high volume in trading. So it's good to know what's going on. So that's why we look at this information. Then we got the non-farm payroll numbers that come out on Friday at 8:30 a.m. So this is going to be another market mover, like the jobless claims. Those jobless claims are crazy. So we got the initial job claims here on Thursday. So, and we still got some unemployment, some data here, but this is going to be the big report right here on the non-farm payroll data, to see, because the Fed, because again, we follow the stuff that the Fed talks about and that the Fed is looking forward to also. And this is some of the stuff that they're looking forward to. Let me go back. So yeah, right now we have, so this is how it happened again. So 2 weeks in a row, energy was the top performing sector. And again, one thing I want y'all to just keep in mind and remember is when the stock market is in turmoil and everybody's afraid, you got to understand, like, there are a lot of people who have their money in like mutual funds and 401ks that are managed by like these hedge funds or big companies like ADP and other stuff like that, right? And so to them, for us, it's easy for us to say, you know what, let's sit in cash. But if they're managing people's funds, right, and they charge these expense ratios, so they never sit in cash. They move it around. They keep it moving because sectors rotate. And I mean, it's almost like, and I'm going to start doing this with my team like more, but I don't do it much with my team. Excuse me. We talk about it, but we don't do it much. We got to start looking at these, like it's riddles, and and you can decode it a lot. A lot of time. Now, let's exclude energy for a second, because just for a second. But what typically happens is the worst performing sectors the week before are normally the best performing ones in the following weeks. So it's kind of when they're depleted like this, you got to look at it. We use something called RSI, right? Relative Strength Index. And it ranges from 30 to 70. Well, let's say the range is from 30 to 70. You can go lower and higher than those things. And if anything that's 30 and below is considered oversold, anything is 70 and above is considered overbought. So when you see like, okay, damn, they're just pumping money into energy. And I said, let's exclude energy for a second, because when the market is in turmoil, they got to put their money somewhere. Now we can take our money out, but the hedge funds that's managing people's money, they can't just take it out because it's not doing anything. It got to keep doing something. So they'll move it where it's likely to make money. So they'll move it into gold. So we were talking about that the other day. The ticker is GLD. We played it. We played a lot around here. We haven't played it recently, but we were playing it more in the first quarter of last year, and now we're in the first Q1 again. And gold, it does really well when things are in turmoil, because people like to dump their money into commodities as defensive investments. So they got a lot of defensive stocks. So gold, then you got oil and stuff like that. And oil has just been running like crazy. We're gonna get an oil sector update soon. I'm gonna make sure we get to that today too. This time we've been skipping it. But I want to just look at this. Let's just pay attention to this. So utilities got beat down. Now, keep in mind, utilities, it was materials and utilities. They were actually one of the top performing sectors last week. I should have kept up the last one from last week to just, next week I'll have the side by side from the week before, so we can do it like that. But it's like, man, the utilities and materials were up there, and energy was still up there too. But it was a lot of these, like consumer discretionary, I'm looking at how communication sector, financials, they didn't get hit as bad as I thought they would. Now, the communication sector did well because Netflix and Meta were doing pretty good. You know, Meta has been. We're gonna get to Meta shortly, but they did pretty well. Another sector that's defensive is healthcare, but healthcare got beat down badly last week. But it didn't do as bad this week. So this is what I'm saying. But then what we like to do is unpack those sectors and see what, you know, at what time. So I like to do things like just to go ahead and see at what time of year what sectors do the best, and that's where we play that sector rotation. But that's a little further than we need to go today right now on that. I think I skipped that. Did anybody got any questions about anything about this before I move on to the next slide? Cool.
No.
Cool. Now I'm gonna hit the oil update before we go into our the recap, because we always be skipping the oil update, and I want to let Corleone do his thing this afternoon. If we got an oil sector update, is he on here? Yeah, I don't think he's on here right now.
Yeah.
Okay, cool. We'll get the update from him later then, because I always forget to get to his update or whatever. So, all right. So let's do we're going to hit the Tesla delivery numbers, and then we're going to go into the recap from last week. All right. So this is the thing. So Tesla, we know we were looking forward to this. On Friday afternoon, I recorded a chart on TradingView, and I posted it in the chat too. Letting everybody know that although the market was closed today, the Tesla's delivery data was coming out. This is a big report for the market. Tesla is one of the top stocks in the New York Stock Exchange, and it's still one of the top 10. It's so crazy that it's still, yeah, but it's one of the top 10 stocks that we have in the stock market, in the S&P 500, and one of the top stocks in QQQ as well. So they, you know, if you look at the number, if you look at the data, it's not bad. It's not really bad, but this was the thing. This was the Q4 production. The production vehicles, they had 437K, right? But the estimate was 400, and so they had this one. This one was cool. This one was all right? But this was here. They had the estimate for this is I got it mixed. My bad. So a lot of this data is the wrong data. Hold on one second. I got it right here. Sure. This is the old data. This is the data from Orb. This isn't the update. They missed everything, basically. I got the information right here. I don't know how I posted that. But they missed everything. They missed every single one of these numbers. And I got them transposed is what I did. I got them transposed, the data that they missed everything. But it's not, if you look at the misses aren't, to us we can say they're not big, but it's like, damn, you missed by but you're looking at a company like Tesla, and then the overall report says they're up 40% year over year. So it's crazy. But the thing is, these are just Wall Street estimates. And the thing is, they get these estimates based on what the company says after the last data came out, or based on the previous data. And you know how Elon is. So Elon just hypes everything up. And so based on that data, the analysts, they rate the company and give their expectations or their estimates based on that data. So that's how that goes. But yeah. And hold on, I think I skipped something. I'm just wondering where we did not come up. Yeah, there it is right there. So I want to hit the recap, man, and lessons learned from last week before we hop into SPY, because and obviously it's going to take us into SPY, but let's just talk about it. Does anybody have any lessons or anything that they learned, or just anything they want to share that could be helpful to everybody else that happened last week?
Yeah, just
Hey, KK.
I learn something new every week. I just trying to hone my skills, but I'm sorry. Yeah, so it's a few things. Well, one, Happy New Year to everybody, and I just hope 2023 we just kind of focus on being vulnerable and putting ourselves out there so we can really understand everything that's going on. Like, I don't think anybody in this group wants anybody to do bad. We want everybody to win. So I just want everybody to just kind of make that a part of their New Year's resolution per se. But last week, um, I just been looking at kind of zooming out and looking at not so close contracts, like even when we're swinging. Once it hits about Wednesday, I start looking at next week. I start focusing on how can I, and those contracts may be more, but you gotta pay to play. And I feel like that has been more lucrative for me playing it that way, because the moves, we see the moves happening, like they're coming, but they might not come within that next day. And you wanna maximize your chance of actually reaching a strike price. Like Antoine has always taught us, when he chooses strikes, he's looking for the strike that he believes is gonna go in the money. So when I'm looking for strikes, I want to look for strikes that's going in the money. I don't want to take a strike that I don't believe is going to go in the money within the time that I retain the strike for. So let's say on Friday, the market turned around. Like we was looking at it, it looked like it was ready to start moving down. According to how the weekly set up, like we was like, okay, it's ready to start moving down. But we had some good data that actually turned it around. So it started running the opposite direction. So when I chose my strikes for next week, I strangled, some SPY puts and calls for next week. But I chose my puts for Thursday. And I spent the extra money to get those puts because I wanted to give the market enough time to make that move, because I believe that it's coming. But it may not come right on Monday. That's the beginning of on Tuesday. That's going to be the beginning of the market, the beginning of a new year. We didn't know what was happening with this Tesla report, so I wasn't going to take a chance and put my money into that strike for that date. I wanted to give it time and make sure that it could articulate to what I wanted it to be. So just making those type of decisions and thinking bigger picture than I used to think when I first started trading.
Good. Thank you for sharing that, KK. I like how you put in there, like you said, you got to give these plays time to play out. You got to, so like, for example, like she said, if I'm looking at the weekly and I see the way the weekly is setting up, I know the weekly can take some time. Now we're going to go into some details because like after we're so locked into this market that after the market closed on Friday at 4 o'clock, everybody's, ready to go out and celebrate or for the long weekend. And we got on Zoom and stayed on there for an extra 90 minutes just to unpack this upcoming week. So, we saw a lot of things, and I'm gonna share some of those things, some of the things with you, some of the things with y'all, just so y'all can see what we went through or whatever. But yeah, it's just, when you see certain things and it prepares you for different things, because again, this market, man, it's easy. I don't care what nobody says. Everybody who's trading, they're trading in their own, tax bracket based on their own comfortability level. I would hope so anyway. And so everybody has psychological issues with this. Everything about this is psychological, 90% psychological. So, but just know, like when you see me just winning or it seem easy, it's because I'm always in these charts, man. And so we saw a lot of stuff on Friday, and we just in general. And but what KK was saying is she gave herself some extra time just to kind of let things play out. And just because also you got to look at, we're not trading stocks, we're trading options. So we got to worry about those Greeks and that theta, so even if you got, and then with the, a volatile ETF like SPY, you got to give it some time. But anyway, let's just talk a little bit, man, because again, like unless, how you ever been to church before, you ever see the pastor, he'll open the Bible or something, and he'll just have a sermon and he'll title it something, you know what I mean? And he'll just go off of that. So the title of this sermon is Every Chart Tells a Story. And so this chart right here, this is the SPY daily chart, and this is the non-session. And no, it's not. But yeah, so this is a SPY. This is a SPY chart. But anyhow, this is the daily. Just look at this chart. And so let's just start from here. This is October. This was October the 13th. This was that CPI report. And the market, it pulled a fast one. It ran up. Next day came back down. But if you look here, this is a channel. This is a channel. And then we got the 200 EMA right here, and we got the 200 SMA right here, right? We also got, and I just want y'all to know everything that's on here. We can just unpack this together. This blue line right here is my 9 EMA, and this lime or green line right here is the 50 EMA. All right, and this is all the volume. So right, if you look at this channel, you see every time SPY hit the top of this channel, it got rejected and came down, and it bounced here. Every time it bounced here, so it maintained the structure of this uptrend the entire time. We gapped up a few times, but it never had enough. We even got here to the 200 EMA. I remember this day like it was yesterday, and it got rejected here hard, even though it broke through there a little bit. But it was important to pay attention to how things close, because if you just it's a lot of people that probably were waiting, like, okay, it broke above the 200 EMA, and SPY hasn't been above the 200 EMA since August, and it was just for a brief moment, right? But you got to wait for that candle to close. This is a daily chart, so every candle represents 1 day of price action. So if you got into this play hoping or just thinking that it was going to continue or whatever, just let's say you bought calls, you would have got head faked, because it got rejected at the top of this trend line right here, and it came back down. Bounced off the 9 EMA right here, and it maintained that for a little while. I think this was I don't know what report this was. It could have been FOMC based on the date, maybe. I'm not sure, but it could have just been anything or some other data. But here we go. Either way, it got rejected at the top of this range again. Came down here, we had some things going on. It ended up breaking this downtrend this month, right? I'm sorry, last month. And when it broke this downtrend and lost the 50 EMA and the trend, so not only did it lose the trend, it lost the 50 EMA. We came down here. Now I'm gonna open this up a little bit. Yeah, a lot easier now. So this is how we close. This candle closed like this. So we gapped down that next day. So we've been under the 9 EMA on the daily ever since. It's been consolidating in this range. And we made some strides and some moves, but it keeps getting rejected here. So the next goal we were looking for, if SPY can't break above this 9 EMA, now again, this is a daily. It can break above it, but it hasn't closed above the 9 EMA. So a lot of that pump faking that's been going on in the market, you got to zoom out and look at it. And so we had a lot of volume that came in on Friday. Now keep in mind, it was low volume. Most of the market makers were on vacation, and they came in at we'll get to that in a second, but it's a lot. So you can see, like, we did get some volume that came in. That was the biggest volume that we had all week. I mean, it was Friday, and the week before that we had some substantial volume on Friday. It was okay volume there. So, but anyway, I'm just saying, like, you see all of this noise that the market was making, but if you zoomed out and you were playing the longer game, you see, okay, SPY ain't really making no noise. It's bear flagging now. It's consolidating under this. To me, I consider this a distribution zone. Now we're gonna also look at a few other things that shows up on this chart. 1 second. Now there are a few caveats though. The RSI is at 44, so it's like nowhere. It's like closer to oversold than anything, but it's not oversold. It's not 30. It's not even. It's close. We're a little ways away from there, but. And this is just the daily chart, overall chart. And even with the market pump like this, these last 2 days or whatever, it still remained down there, right? So what I'm thinking SPY could do now, before I get into the stats and what has happened, let's just see. So the fact that it closed down here and they made some noise at the end of the week, I think, and again, I try not to think like this or just put everything like this because, you know, I'm a technical trader also. But we got to understand, like, the stock market is run by market makers also. And there were over 400, almost 500K went into the 380 put that expired Friday. They made a lot of money going into Friday and throughout the day on Friday, but they made sure that that contract expired worthless at the end of the day. They didn't let that contract expire and the money, right? So SPY finished at what was that? It finished at 382.43. That was where it finished on Friday. And so they burned them puts up before the market. But look, the crazy thing is, I was telling KK and Ty on Friday that max pain for SPY was 382. I'm sorry, 383. It closed at 382.40 on Friday. So what I see happening is this, man. I feel like the market is still going to continue to downtrend on Monday, but a lot of people probably bought calls going into the weekend because they saw this pump. Everything is psychological, and a lot of people are FOMO traders, so a lot of people probably bought calls going into the weekend because of what the market was doing. But the market really didn't make no noise, because if it was pumping like that, why didn't they take out the 9 EMA? Why didn't we close above the 9 EMA? Why haven't we been able to do so? Now it could gap up. I think it's going to gap down. Now we'll see tonight at 8 p.m. when the Asian futures market opens, see what they're doing. But you know, sometimes we still don't get what we need until our pre-market starts at 4 a.m. So I'm gonna give you some scenarios that can happen, and then I'm gonna give you some other things that I see. Well, matter of fact, I'll give you what else I see first. I gotta bring up this other chart. Let me show you exactly what I see, not what I think for a second. I want to get off that for a second. Take this off here. Hide that. All right. I was talking to the team about this on Friday, but let's see, it's ugly, but let's just talk about it anyway. There's a few scenarios that can happen with this market. And one of the things that I was talking to this team about was this pattern that I see, this candle pattern. And I see a head and shoulders. Go here and get my little. Now this is an ugly head and shoulders, but it's there. Let's just make it happen. I ain't gonna do the whole thing, but shit. Now again, I'm gonna show, like, if you look up, and I'm just gonna tell y'all, because I know this is ugly, right? But if you look up head and shoulders, right, they can be sideways, they can be, shit, hold on. Why did this turn out like that? Oh, I see what I did wrong. Reset it. Now, I'm gonna tell y'all it's a few ways this can happen, because it's a possibility that that other shoulder hasn't fully formed yet. And that the market could go up to 390, and that would fill that other arm. But hold on, let me get it up here first. Shit. Oh, all right, that's what I did wrong. I don't know why it's doing it like that. Oh, all right, I see. Because what it's doing is, got you. There we go. I'm gonna let it go. Yeah, it's not working. Hold on. I drew this chart on Friday. Let me show y'all real quick. I don't know why this, it's like whenever I start recording, this stuff just stop working sometimes. But here we go. Watch this. Y'all, so y'all like, I ain't crazy. Watch this. All right, I'm just gonna paste it here. I drew this on Friday with the same chart, man, but now it's not working. And whenever it knows I'm recording, it stops working, right? So it's the same one. I don't know why that indicator just wasn't working right today. But so this is the same, the pattern, right? And if you look, a head and shoulders pattern is a bearish pattern. It's a bearish candle pattern. And so This is the first one, and this is the head here, and that's the second one. And again, I was saying that if it goes up to 390 would be perfect. It would fill this gap right here, or just fill that gap, because they don't have to be congruent. It's a lot of times where they aren't, and then it comes down. Or, you know, this could just be it right here. You know what I mean? It doesn't have to be the full thing. You know what I'm saying? It doesn't have to be the same height. And we got our neckline right here. And this consolidation has already happened. Now I'm gonna go back to my regular chart so we can see. I just wanted to show y'all that, like, I'm not crazy. And if you look up Head and Shoulders patterns, you'll see the variation of how they can be done. But I'm just looking at the possibility, everything. We got all of these. We got a lot of confluence is what I'm saying to the downside. And the fact that we're still under this 90 MA, we could not fill this gap when we were trying to. And we in this bearish consolidation here, because this is also can be a bear flag too. So it's a lot of things going on that's bearish. Now, if we lose, this is the thing. If we lose this level here, because we've been bouncing off of it. Remember, we dropped below this level on the session hour on Friday. But you can see on here too. You can see the wick. But we got a strong bounce at this area. And also I want to let y'all know, right? We got these lines. We drew a lot of lines, a lot of consolidation and stuff like that, right? Where it's consolidation, we draw our lines there for our demand zones and stuff like that. And I'm gonna show y'all clear on the weekly. But you got to give these candles margin, because you see sometimes they come down a little bit lower than before or whatever, but it doesn't mean that that level has technically broken until a candle closes. And it also depends on how long you're planning on staying in the trade. So I always give myself margin when I'm playing. But what I'm saying is I think that that this is going lower. We found a way to close above 380 on Friday. And again, I just felt like that was just for the market makers to make back that money and just to make sure that they didn't lose that additional data because of Max Payne. So that's what I believe that was for. I think we gap down tomorrow. And again, look, I'm on this live broadcast. That's just what I think, you know. So, but I always plan for whatever could happen. Like even with the Tesla numbers, I told everybody, if you're going to play it, make sure you strangle it, because the data could go either way. And so we'll see how that plays out. But yeah, let's go to the weekly. And then while I'm bringing up the weekly, I got a few stats for y'all too. So over the last, and I'm gonna go back to my original chart, over the last few years, I'll say 3 years, because that's since COVID started. Let's just say, even because if I say 3 years, that gives us a year before COVID too. The week before New Year, the market consolidated like it did this year, and the week after it ran at least $10 in either direction, or it moved at least $10 in either direction for that week. So this is, with that information in mind, just think, like, you know, even if I don't know how the week depending on how the week starts off, and then like we can't ignore the fact that SPY is still in a big ass bull flag on the weekly. It hasn't broken the structure of this yet. When you look at this, I mean, the weekly, you know, the structure is there, but I'm just saying, and I got this drawn out on another chart, but I want to show y'all something on this weekly chart real quick. Because if you see, there's a trend, there's a consolidation channel here, a downtrend channel ever since, and this was right here. This is the craziest thing right here. The downtrend started the week of January 1st. I'm sorry, of January 1st of 2022. I'm sorry, 2022. We hit an all-time high, 49. We hit 479.98. We almost hit 480. It got stopped there, and this is a weekly chart, so each candle represents 1 week of price action, and it just been going down ever since then, right? So this is just and this is a weekly chart. And so SPY's been respecting the hell out of this, right? And I'm gonna tell you another thing. This is why we talked about this on Friday also. Look at this here. We got two hammers here. But if you look at it, they kind of like, but this is the weirdest part. Now, a lot of people don't understand the significance of what just happened these last 2 weeks. Now, we saw it played out in the on the daily as just like a bunch of consolidation under this gap fill area, this bear gap area that the bulls were unable to fill. That's what we saw. But if you unpack this a little more, let me see. I'm gonna see if I can, if anybody wanna unmute and tell me what this candle means to them, like who wasn't on the call Friday. What's cool? I'll tell you anyway. So bears pulled the market all the way down here. So bears pulled the market all the way down to 340. I'm sorry, to 374.77. This was the week before last, and they took it all the way up to 387. So the range was from 387 to 374. That was the range that it had on SPY last week, but it opened last week at 383.47 and it closed at 382. So it closed 383 and 382. It closed within $1 of where it opened. So all of that noise it made, it opened and closed like relatively close. It's crazy. And then this week was even worse as far as that scenario, because it opened at 382.79 and it closed at 382.57. So not even a 50 cents difference. So it didn't even close within 50 cents of where it opened on the week. A lot of price action, but its open and close was relatively close. So I'm just saying this to say, like, the market made a lot of noise, but it didn't do anything. It's still bearish. And it's still closed under these. But then some people will look at this and like, well, that's a double hammer, or similar, almost a hammer, right? If I make this a little wider, right? But this is the thing. It also means that bears pulled the market all the way down here, but the bulls were resilient and pulled it all the way back up. That's what it means happened on both of these candles. But the one that the significance about this last candle right here, though, is it's an inside candle. So it didn't take out the higher last week and it didn't take out the lower last week. It's inside. So it's an indecision weekly candle. And it closed like an indecision because it closed like less than 50 cents from where it opened. So this is going to be an interesting thing. And like I said, the stat that the market has ran at least $10 the week following the first week of the year for the last few years. I'm expecting some volatility to happen. But but what does that mean for us? Why am I telling you this information? It's because a lot of times we will get, like what KK said earlier, we'll get into these trades and we'll just buy. Now, don't get me wrong. There are times where we're only playing for a specific moment. Like we're playing, my MO, I like to be out of my trades, most of my trades by 10 a.m. If we plan to open, I want to be out by 10 a.m. If we swung overnight, just for a specific reason, I want to be out by 10 a.m. You're going to get the best price and everything by 10 a.m. Be out by then. But if we're building a position we're foxing a bigger move, you just want to buy more time on that contract, because look, the market makers did all of this for a reason. They like to chop up plays, and they know that the market is going to still do whatever it was going to do initially, but we're going to shake everybody out of these plays first. They go hunt stops. It's typical places where people put their stop losses at. They go and hunt those stops, so they hit those points, so that way your stop gets you get taken out of your trade, and then the market moves that way. It happens a lot. So the fact that we closed inside, and like I was telling the team on Friday, that there are only certain scenarios where the market didn't go down in this situation. Now, the market may open up. The market may open to the upside on Tuesday, but that doesn't mean anything. What I'm going to be looking to do, if the market runs now, keep in mind, if y'all don't get anything else out of this meeting, I want y'all to remember this one thing right here. I'm going to go back to the weekly and that's the weekly. I'm going to do it just like this. All right, yeah, it's the same place. I wanted to make sure it was the same. All right, so I can go back. All right. If y'all don't get nothing else out of this meeting, I want y'all to remember this. Our 9 EMA is right here. Now, I want to see where that translates on the daily real quick. because we closed under it on the daily also. So our 90 EMA is right there at the 380. Let's just call it the 380. That's 383.40 just to give it some margin, right? And I'm thinking that bulls should be able to at least get to the 50 EMA to 388.5 or, you know, somewhere up here, 388.45 or something like that. They should be able to do that. If they get there, they should be able to fill this gap. So I'm expecting if the bulls are able to get a running start, they should be able to fill this gap. If they can't fill this gap, I'm gonna say, let's start here. Because again, let's start small because people don't start small enough. They may break above the 90 EMA. They broke above it before, but it's about the close. So just zoom out sometimes. I'm expecting for them to retest this area again, 386, before a move down, right? But at the most, I'm like, okay, maybe the 50 EMA. Getting above the 50 EMA, they may get a little more strength or whatever. But I'm like, if they get there, they should be able to just close this gap to 389. That's why I just said 390 is where I'm expecting for bulls to be able to take the market if they are able to get momentum and the market moves to the upside for a little bit. I don't think it's going no further than that. Then it gets rejected hard and it comes down. So I said that to say this. If that happens, remember this conversation, and that's where you want to start your position for your puts. You want to start them there. You don't want to, and again, this is a very controversial way of thinking. When you, unless you're, like I said, if you're playing certain, but you got to give time on your contracts also. But like I said, I'm looking at certain things to happen at certain times. Obviously, you're going to watch the market. Now, this is a daily chart. So this is 1 day of price action. So most of the time when you're taking your trades on a daily basis, you're taking them on a lower time frame. So you're looking at things a lot differently. It looks a lot different. Like if I'm gonna unpack that for a second, go to the hourly and see how that one candle looks on the daily, that one daily candle looks broken down into 8 candles. And you see that oval shape right there. That's that whole week that I drew that was inside of the last week. All of this happened in 1 week, but this is it on the hourly candle right here. You know, this is it on the hourly, because we had a short week last week too because of Christmas. And so things just were slow, but this was Friday. This was that breakout in the last hour, you know, and it ran up. So I'm saying that you just want to kind of, and we weren't even in oversold, overbought territory then either. The RSI got up to 55. So it still wasn't oversold, and I saw the MACD started trying to turn up. So right there, that looks like a regular, like on the lower time frame, like a signal, a buy signal, ready to start a buy signal. When the MACD line crossed above the signal line, you got the volume, prices above the 90 EMA, everything. That was a place to. This was an opportunity to take a trade, you know, right there, just based off of that data alone. But look, but what I'm saying is, we're not just playing a regular market. We're playing with the market makers, and we got to think of like I said, every chart tells a story. This is intraday trading. So this is like if you're day trading, you know, meaning you're buying and selling within the same day. You're not swinging this. You're not looking at the hour. I'll look at the hour in conjunction with the daily and the weekly, you know, to swing. But that's not what I'm using to make my decision to swing. I'm using that daily and that weekly chart to make my decision to swing. And like I said, this just doesn't give me enough information. This doesn't show me. And again, a lot of times at market open, before SPY makes its real direction, we get a little pump. You know, that's how they make a lot of money. Think about, you know, it's like a fishing net. They put that fishing net in the water, the market starts to pump, everybody jump in with calls, and then they pull the market down. So let's just watch these levels, because it's easier said than done, and everybody's going to be anxious tomorrow morning. So there are a few ways to trade the open, right? So if you're just somebody who works every day and you don't have a lot of time to just be and you know, tomorrow is a Tuesday, so I'll be on Zoom in the morning from 9:30 to 10:30 a.m. And so if the market gave an opportunity to the upside, you know, I'm gonna call that trade out. If I like the trade, you know, I'm gonna call that trade out. But I'm also looking at certain things to happen, and I won't be looking at this chart. I'll be looking at a lower time frame. You know, I like to take my entry on the 5-minute chart at market open. So I'll be looking for certain things to happen at market open, and I don't have VWAP on this chart. But let me just get this out of here. I don't have VWAP on this chart. But yeah, but it's certain things that I would be looking for to take the trade. And the thing is, but we trade off of a lot of rejects too. And you know, I like to trade off a reject too. I want y'all to pay attention to this thing real quick. Just something really important to pay attention to on the lower time frame. The 9 EMA, this blue line right here. When price broke below the 9 EMA, it tried to retest, but then it fell off a cliff, right? And again, this is a 5-minute chart, so each candle represents 5 minutes of price action. The lower the time frame, the higher the emotion. So that's why you use the higher time frame to find the trade, and you use the lower time frame to actually take the entry, to enter the trade. And so I'm showing y'all this for a reason. So when we got this bounce, this little pivot right here. Now, Kevin, Potato Trader, he would have taken the trade off the pivot right here and got out here. You know, me, since I was bearish, I wouldn't have taken this trade at all. And I would have waited until it retest here, got this rejection, and then I would have gotten the trade right here. And I would have got out down here. You get what I'm saying? I'm not going to wait for it to go back up here again. I'm going to see what these candles do. So I'm going to get out right. Once this candle bounced here, because I look at the closes, man, I would have got out down here. One of these candles would have got out, because this trade would have taken me up 100%, over 100% already. There's no reason. You know, I aim for, obviously, you know, I tell the team 30% threshold. If you can't swim, then you shouldn't go deeper than three feet. So 30%, take your profit at 30%. And you got to also have a area where you're not comfortable. Like, for example, let's say you can swim, but you just you don't perform at your best when you walk in, when you're in water that's deeper than 6 feet. You know what I mean? So you're like, all right, well, cool. I'm gonna stay in my wheelhouse. I'm gonna stay in my comfortability area, because no matter what he's doing, if I'm not comfortable, I may lose money. I'm gonna make a mistake. So you still want to have. So if you are down a certain amount that you're not comfortable with being down, then you gotta, you know, whatever. But I mean, sometimes, like I said, when you're playing SPY, depending on the amount of contract, depending on the number of contracts you have to leave margin. Me personally, I leave 30% margin for SPY before I would cut a trade, because that's just how I play SPY. You gotta account for the volatility sometimes, depending on where you got in and what type of trade you're playing, if you're building a position for something else. But on the lower time frame, I'm just showing y'all, because I've gone through this before, but I want to just make sure we cover it. When you're trading off of a retest, when you're trading puts off a retest, you want to wait for it. You know, like if you're watching certain things, I mean, there's a lot of things you're doing where you actually waiting for, you watching for patterns and stuff like that, or like when people double dutch, or when they playing certain sports, you just wait, you watching for certain things and certain patterns, and then you strike. Same thing with this. So it's like you got to have the patience in the game. People will see the market falling off a cliff, like you saw this candle, and now you see that, you're like, all right, now it's down here. Now you're comfortable all the way down here, because you know, and that's normally when it's too late at that point. By the time everybody sees it once it's down here. So of course it's going, you know, it's, and I ain't saying that's what always happened, but I'm saying, like, you got to be ready for the move. So like, all right, cool. I missed this move. People be like, why you ain't call it? I'm like, man, I missed that move. I'm gonna wait. So now we get the retest. Here's the retest. I want to trade here. The probability, and I'm looking at past, just looking at the history of the chart. The probability of it getting rejected when it retests the 9 EMA is pretty high. Now, this was just Friday. And again, this was low volume, but excuse me. And the probability of when it get above that 9 EMA and it retests of it moving, you know, it was pretty high too. But after, you know, depending on what the move was, if it was a big crazy move, then yeah. So at market open, a lot of times, if we get a gap up and prices moving above the 9 EMA and VWAP, I don't got VWAP on this chart. I don't know why I don't, but I don't. I'm gonna put it on here for a second. There we go. Too many lines on here, man. I'm gonna edit that VWAP because I don't like it like that. Sorry, y'all. I just gotta get this right. do the I'll show them. I'll show that. I just want that VWAP line. That's all. And I can take some of these. And just to let y'all know, I never, and then y'all know this, I never trade with all of these EMAs on here. I just got them on here because we needed to look at the weekly and a few other things, so I had them on here. And I'll just leave that stuff on there. But I just have the non-EMA and VWAP on here. I don't, on the 5 minute, I don't need nothing else on there. And so look, but this is the thing. So market open. This was on whatever day this was. Market open, gapped up. SPY, it dropped, it came down a little bit, but this was VWAP right here. We above VWAP, we was already above the 9 EMA. I would have waited for that second candle. This candle closed right here. Once that candle closed above VWAP, man, I was in this trade. Or you could have waited for the retest right here. A lot of times I wouldn't have called it out to the team until that retest, you know, but it depends. Like sometimes that 5 minutes to me is enough. Depending on what type of data I'm seeing. And based on this, I would have taken this trade. I think we did take this trade. If this was, yeah, this was Thursday. Did we take that trade? I'm not sure. I know we took a trade. Maybe it was a meta trade. But yeah, so right here, I would have, but sometimes what we do is we wait until that retest. I may have added to this position on the retest, but the thing is, if I'm trying to get out of this trade by 10 a.m., then, and you know the latest 10:30, then what I'm doing here is, this is a massive move. It doesn't seem like a big price move, but to think about it like this, at market open, we gapped up, so the volatility was high, so that means the Vega exposure was higher, so we're gonna get paid more money. If I was to bring up a options chain right now and just show y'all the just how the Vega exposure look, I'm not gonna do that because we don't have time to do it, but just think about it like this. Let's just use I'm gonna use a Vega exposure of like $5, right? So, and the implied volatility, let's say the implied volatility at market open pumps like 10%. So for every 1% increase in implied volatility, you get $5 added to your contract's premium. So if the implied volatility jumps by 10%, that's $50 added to your contract, and it keeps increasing as the market continues to move, right? Without what's up with my mouse? Mouse keep freezing. There we go. As long as the price keeps increasing, right? But this is the thing. The reason I say 10 o'clock is because normally after 10 o'clock, we got until 10:30 for power hour to be over, but I want to sell in strength. Because by after 10 o'clock, the market starts to, 10:30, the market starts to come down, but the implied volatility starts to taper off. Because look at this right here. After 10 o'clock, we made some higher highs, but it took a little longer to get there, right? As opposed to these big candles right here that kind of pumped up real quick. So that made the IV go up too. So if it starts to move slower and we got contracts, and I'm just using this as an example, because if I'm trading the open, and my only goal is to trade until 10 a.m. or 10:30 at the latest, I can get a contract that expires that day. It's absolutely no reason why I shouldn't. I'll tell you the caveats to it, but the reason I'm doing that is because the delta is going to be high as hell on those contracts. And the delta, I want my delta to be 30 and above, and the delta is going to be a lot higher on the data that's expiring. But so is the theta decay, which is the the time decay that's burning off your contract. But while the market is running, and I'm getting out soon, the market makers, they'll get them. They're not going to get me because I'm planning on getting out of here by 10 o'clock, 10:30 at the latest. So if I'm sticking to that, I can get a contract that expires to the same day because we're trading in market open. It's a lot of time left on that contract, but it's when you start you start seeing this vision of, damn, I saw what the trades that they were in yesterday, and they turned $40 into $400 off of them spy puts, or they turned $23 into $100 and something off the meta puts. I want one of those big trades like that too. So I'm just gonna make this do this, although that you're trading options and your contract expires today. You just have to you have to just get out. You have to take it and just take your profit and go. You're gonna regret it, because then what'll happen is I'll say, it's 2023. I ain't gonna be modest. Like 95% of my trades go at least 100%. You know what I'm saying? So And that's if they get called out at market open, most of them trades, they're going up at least 100%. So if you missed it, if you weren't on Zoom or you weren't in the audio chat, so you missed it initially, or Discord may have sent the notification out a little late to you, or you just weren't monitoring the trade call out channel or the trade alert channel or something like that. A lot of times you do get time to re-enter, you get time to get into those trades. But what happens is a lot of people chase those trades and they still buy the same contract. So now think about this. I called this trade out at 935. And now, I'm pumping it. I'm telling you, like, okay, the trade is up 100%, or it's up, let's say it's up 30%, it's up 40% now. And you're like, shit, I'm getting in this trade. And then right here, we get a retest. So now keep in mind, we up 40-50% now at this trade. I'm just using this as an example because this trade would probably be up like 70%. But I'm just saying we up 40-50% at this point. You get in right here after I say it's up 50%, and now it retests. It's just a small retest of of VWAP. We still up substantially on the trade, but now you're down because you paid more to get in, and you're probably down like 10% on this trade, 5%. You're down though. So now you already feeling some type of way. You already not feeling good about the trade, because so what I like to do is if I call out a trade, the first thing I would do, you can either get on Zoom or in the chat, or just post in the chat and ask, like, is it too late to get into that trade? I know it already ran. You know me, I'm probably already in the channel talking about it on Zoom or whatever. If we're on there telling you exactly where I think it's going next and what it's about to do, or don't worry about it, it's going to do this, I'm adding to this position here. We're talking about it, right? So, but you want to just be mindful of those things, right? But then also think about it like, okay, it's 950 also. What do I think this doing? I'm be looking at the volume that's coming in. I'm analyzing this volume in real time to see what it's doing. If it's accumulating, do we have any relative volume? You know what I mean? So the relative volume is volume that's higher than the normal volume at this time of day, at this specific time, or at, with this particular thing. So I like relative volume at certain times of day. Like raw volume is cool, but when you got volume that's higher than the normal trading volume, then I'm like, okay, cool, let's do this. And so that's another thing that we keep in mind or whatever when we're trading. But I'm just saying this is important, and I'm covering this because there may be opportunities in the morning for some quick trades that don't require you to hold for a long time. Because again, if you're working, and again, I can only say this because I'm just saying this myself. Like, man, I've had a job before and was trying to trade and work, but I was like, man, I'm gonna get that first 30 minutes, and I would go in the bathroom at T-Row and go in the biggest stall that I can find, you know what I mean, and just be in there, have my phone set up, and I would have one of my iPhones and I would have the other one set up, and I would be in there for 30 minutes. I'm getting my 30 minutes in. I'm sorry, I'm not got all my work done, but that 30 minutes, that's my 30 minutes. You got to find that time. You cannot work and trade at the same time. And I'm not advocating for anybody to just to be slacking at work. But man, 9:30 in the morning, from 9:30 to 10 a.m., like get in there early, get a lot of stuff done, get the stuff done that you can get done, and go get ready for the market to open. There's no excuse not to be there at market open if you're trying to get into a trade, or if you're already in, especially if you swung. If I called out a swing trade at the end of the day, and you got in it and you work, you have to be up and be ready to take that profit at market open. You cannot do that. And the thing is, we got Zoom up in the morning, so I got like 8 screens up, so you can see the whole chart set up the way you would probably look at it at home from the Zoom screen, because you can turn it so you don't have to worry about trying to look at it on Robinhood or Thinkorswim or anything that you're using, because it doesn't equate to how it looks on the screen. You still, you can do that just to kind of see what's going on. And then you also have like-minded people around that you can hear talking to. And again, another thing, if you don't have an iPhone, right? Get an iPhone. Well, I'm not promoting Apple right now, but I'm just saying, like, every phone has some sort of AirPods or something like that, where you can have it in your ear and listen in the audio channel. Even if you're not listening to the audio chat, man, because we got an audio only chat. You can just listen in there and see exactly what's going on the days that I'm on there. If I see people in there, I'll keep it up the entire time, and sometimes we're on there even longer. So keep that chat up so you can hear what's going on in the market. or type a question in the chat. You know, I'm doing this and I'm doing that, but you know, but being at work is not an excuse to let your play get chopped up into pieces, because you should have just not got in. Like I know Quasi, he'll say in a minute, like, man, I wasn't in no trades today. I was working. I was busy. And he worked for himself, but you know, it's still like I couldn't watch no trades today, so I ain't get in no trades. If you can't watch the trades, then don't take the trade. But you can't. A job is not a reason not to make no money in the market, and it's definitely not an excuse to lose money in the market. So I just want us to just be successful this year, man. And we're gonna go over a little. We're gonna cover different things like this every week, because we just need to. We need to, and I just need more people to know how to trade the open, man. If you master trading the open, you can go play tennis at 10 a.m. too. You know what I'm saying? And again, I want to get more comfortable knowing that most of the team are able to trade and be out by 10 a.m. Now, obviously, there are situations where we get into trades like right before 10:30, and I'm like, or like, let's say I called out a trade at like 10:40 or something, and I'll tell not 10:40, like at like 10:20 or something. And I'll tell the team, like, do not get out of this trade, right? You know, this is not, don't sell this trade, you know, something like that. But I want to do that, man. I also want y'all to be more comfortable with and then this is another thing. On most days, if the market is doing something weird or we're expecting something to happen the next day, most likely I'm going to call out a swing trade. You know, if I don't feel like I'm going to do something, I may say that. But if I see something, you know, I really don't know until the last few minutes. Who knew that this was going to happen in man, I'm still tripping off for this, man. Because, I mean, I'm going to tell y'all something. Because I got to do it, man. So this is a 5-minute chart. Who expected this to happen in the last 15 minutes? Well, this was look, market makers, they set it off at Power Hour. From Power Hour, they just set it off and it just ran. Look, this was the most beautiful retest and breakout right here. Look at this real quick, man. And I'm sorry, I'm hype about this, man. This chart stuff, this was a beautiful breakout, man. That's all I could do was admire it. Look at this real quick. I'm gonna show y'all two things that's important on this. So, all right, so when we got the pivot here, look at this. So when price pivoted after, because you know it kept rejecting all day. Now this was another key here, all day. This is on a 5-minute. SPY was below the 9 EMA. It played with it, but it never closed. It wasn't closing above there. We had a little times where it got back up there and played, but it didn't do anything. And then when it broke up here, it came back down, right? So we got, I was like, okay, they getting a little strength here, a little double bottom right here, and then it took off. But look, this was the thing. So look at this candle here. So we got this candle closed down here, and this one, it closed above the 9 EMA, and then we got this hammer. So the next candle after that hammer, it broke out and it ran up, right? So I would have missed this here, because I mean, my thing was I would have gotten in down here, honestly. I would have gotten in right here. This is where I would have got in on this next candle here. One of these candles is where I would have got in. And I know this was just and it would have been a trade, just a little small. And this is a 5-minute chart, just something to play. And just to wait to see how things move. I wouldn't have got out here because I already know prices, most of the time it's gonna pivot around 330. And I'm like, or maybe it'll go the real direction at 330 if it doesn't get. Now this is a lower time frame. I was monitoring higher time frames. So, but look, check this out. When it broke up here, you could have waited and not got in here. This would have been fine. It got above this purple line, which is VWAP, and it got back above the 9 EMA. Now, when a 9 EMA crossed above VWAP right here, man, look, check this out. Here it is. I now keep telling y'all, check this out, but look, this is a beautiful breakout right here. Stop that. Watch this. Why does that happen all the time, man? I was ready to show y'all something, and then the market, this chart just do some weird stuff on me. Happen every week. There we go. All right. Sorry, y'all. Basically, I was going to draw the trend line. Draw that point here. There we go. All right, cool. So here, right? So I ain't even got draw the line at the bottom. But look, check this out, man. When the price, this is the perfect type of trade to take right here. Y'all know my favorite setup. I love bull flag breakouts, right? And this is on a 5-minute look. And it's 3 things that we look for when we trade in bull flags. And the best time frame to take your trade off of to actually enter it is the 5-minute time frame. So right here, we had price consolidating after the breakout. We got the breakout here because we're not taking this first trade. I'm not taking it. This is the flagpole right here. So we're not taking that one. Wait for the consolidation. So now we got the consolidation above the 9 EMA. But just as an added bonus, we had it above VWAP too. So it's consolidating above VWAP, well, the 9 EMA right here. We wait for the breakout, right? And the thing is, this candle broke out. But you know me, I like to wait for the candle close. So it's like, damn, I know you would be like, damn, the candle closed and it's running. We're going to miss the trade if we wait for the candle to close. Nope, let that candle close, let that candle close. Now, personally, you didn't necessarily have to wait for that to happen because technically, I look at it like this. If I ain't draw this bull flag, this was a bounce off of VWAP and the 9 EMA. I'm taking that trade too. It's a 5-minute. But we also had the momentum of MACD. The MACD line had already crossed above the signal line. Now, you know that's a lagging indicator. So what happens by the time MACD line crosses above the signal line, price already took off. So we got it in confluence because it already happened. Look, and we got substantial volume at that point where we're getting in. It had everything that the perfect trade needed right there on the lower time frame. So even if you waited for the candle close and you wanted to just be extra, you wanted to be conservative, it ran into the shot through the stratosphere for the next 15 minutes. So you still had an amazing trade opportunity. I know a few traders in the group took the trade at the end of the day too, but yeah. So but those, if you were holding puts, right? So if you were holding any puts on Friday, any puts left holding any puts like that expired on Friday, they got chopped up, especially if they weren't in the money. So the way to play the last hour, because again, like you would be like, okay, well, what if I didn't want to trade something that for next week, and I just wanted to trade something for this week? I would recommend the next week anyway, even if it's just one day. You could always trade in the money. Like, for example, I was on a call with KK, Corleone, and Ty. We were on Zoom right before the close, and I was in those SPY 380, I think it was 382, 382s, because what they did was, so I was in those 382s. I grabbed them when the market reversed, and I was just, they were printing, right? But what happened was I grabbed them for the same day expiry. And what the market makers did, they automatically sold it for me. And I forgot to make that phone call, because you can call TD Ameritrade and you can tell them, call their trade desk and just tell them, like, look, I'm managing my own account right now. So I got it. I'm watching it. I don't need y'all to do it. Because what they'll do is they say that they helping you, right? But right before my contract was about to go in the money, they sold it. Now, if my contract was already in the money, they wouldn't have been able to sell it, because if your contract is in the money, you have the right to buy 100 shares of the stock or take the intrinsic value. It's up to you, but if it's in the money, so they can't touch it. It's like it's protected. So I could have just grabbed, a 380 or something when I saw the reversals, because that was in the money down. They made sure, that was in the money, so they wouldn't have been able to sell that if I wanted to trade same day, because then it can expire worthless. And if you really strong, feel good about the direction, and you don't got to go deep in the money, Delta is going to be higher, contract still cheap. But if you think it's going to stay in the money, you grab that contract, or, and you can do it like that also. But you just want to be careful. But the out of the money contracts right before, because out of the money, if you trading on Robinhood, now they added that extra 30 minutes, so you can trade the last 30 minutes. But it sounds like a good thing for people, but the thing is, though, more people are going to trade, and they're just gonna like, if you're going to do the same thing, you're going to still have the same results. Because I'm like, just still buy. If you buy a contract in the money, they can't sell your contracts. You got more than that last 30 minutes. They can't touch your contract if it expires the same day. Just because you have that right. That's just the SEC rule. You have to be able to get exactly what you would be able to get if you were to exercise it. And you can exercise now European stocks, you have to wait until it expired to to exercise it. You can exercise American stocks anytime, before expiration. So it's just another thing that we had. But look, so I got a little too, even to this day, I've been trading for a while, and it's just good to be transparent with everybody too. I was telling KK over the weekend, I told her the other day, I said, I caught on Thursday going into Friday because I expected low volume on Friday, but I wasn't sure how low it was going to be. But I'm like, I'm going to get the team into some really good trades to swing that I think will be good trades. Like, so I called out the 380 SPY put and the market was going up. It looked like the SPY was going to 385 to fill that gap. But the day before that, it looked like SPY was going down to 372, the 375 and 373. And the market makers played that game and burned everybody up. So I'm like, okay, the technicals are too obvious here. And this was on Thursday now. I'm like, technicals are too obvious here that it's just obvious. Like even Helen Keller could see that they was going to fill that gap. So we bought puts. And we also played meta puts too. I'm like, and then we'll be done with the week. That was my plan, to be done by 10 a.m. with the team or whatever and be done. But a lot of people did not get those trades, didn't get either of the trades. Either they missed them, or I know that the notifications sometimes come slower, but I tell y'all, like, try to watch the chat, the main chat, and just watch the channels that the trades get called out in. So even if you don't get a notification, you're gonna see it because you're there, right? Waiting for it to happen, or just tap into the chat. Cause we were literally talking about the trades and stuff, and we were literally talking about what we were doing. We were on Zoom talking about it on Thursday. So before, going into Friday. But the thing is, so what happens is this, man. So a lot of people don't get into the trades, and then they print substantially, and then the next day it's like, well, we need a trade, and sometimes I go against my own rules and I do it anyway. It's still my responsibility not to do that, but I just really would encourage everybody to like lock in and be ready when it happens, because I want all of y'all to get money. So sometimes whenever I do it, it never goes according to plan. I ain't gonna say never, but I'm just saying, like, it's like, if that's my plan, this is what the plan, I'd rather stick to the plan. And so this is what I did to myself, right? So I said, I'm gonna grab some more of these 380s. Like, 'cause I made a substantial amount of money on Friday, but I said, I'm gonna grab some more of these 380s. And I played with the expiry that expired expired Friday. Man, when that, because what I did was, I was like, I'm gonna wait until certain things happen, whatever. And I was up on those contracts I was up so much. But y'all ever get that feeling where when you up on a contract so hard, you become like a deer in headlights, and you just be looking at the contracts like, I'm just not selling it, and you just watching it just keep going up, and then you start doing other things, and you look at it for a second, and then everything gone. It only takes for 1 second for price to pivot. I was out of all of my original contracts, but they were like $20 per contract, so I grabbed a few of them, and they just started printing. But I didn't take profit on those contracts, and a lot of those contracts got clapped up. They were like small contracts, so it took my percentage down for the day a little bit. And it's like, I hate to say, I ain't one of those guys that'll say, well, I made so much money today, I ain't worried about no $300. But when you only paid like a few dollars for it, and you made that type of percentage move on a trade, then it does matter, because at the end of the day, that's, it's just different things. I want you to look at things like that, right? So that and it wasn't even the big move that clapped the contracts. You know what I'm saying? It was when the market is moving down, like, look at this downtrend right here on the 5-minute. The moment it pivot right here in a contract expiring that day, that theta is already the same price. If you look at same day expiration contracts, the theta is the same price of the option. So whatever the ask price is, the theta is the same price if they're expiring that day, and you already in the afternoon. So that means any little small move that it make is already killing that contract immediately. So that's where the issue comes in, and you start to like whatever. And again, like I said, me, I definitely don't like to do it. Don't do it like that because I was in those plays and doing other things too. But I wasn't away from my computer though. I was just like working out behind myself. Like right, I got some weights on the floor, and I turn around and those things were already getting burned up. You know what I mean? So I'm like, those are like that's if you're gonna take a trade like that just that quickly, like with like because I did that. That was like right before. Where did that come down? It was right about, it was, no, I got in right here. It was right here where I got in at. It was right here because it was that 1 o'clock candle or whatever. So those things were printing. That's exactly where it was because then it went down. This is where I was working out at, I believe. And when I came back, this was already happening. They killed my contracts. Those contracts were up so much. I didn't put y'all in that, but that was just something quick that I was doing. I was supposed to watch that and take that profit quickly. That's where I would have done. But it's easy to sit here and you'll see this happen, and then you don't take profit here. You want to sell it in strength when everything is rampant, or if you got enough contracts, you sell them. If they expire in that day, you just want to do that immediately, man. Oh yeah, and just one last thing about that. And if we're on Zoom together, right? Because the last few days I've been really vocal about like we're in the audio chat. I want y'all to hop in. If y'all don't have Zoom access, so get in the audio chat so y'all can hear what we're talking about, right? This stuff we cover so much stuff and it'd be so much to type. And I'm like, well, the whole team can get in there. Everybody can get some AirPods and just listen for a second and see what we're doing, what the plan is for the day, because I'm not telling the team like, okay, cool. If it does this, do this. If it does this, do this. And I'm like, okay, everybody's good because they know I'm not going to be around because I'm going to go do this. I've been trying to be transparent so y'all know what's going on throughout the trade day and not just waiting for the next directive, because again, sometimes you just have to, if it lose this level right here, cut the trade. And if it do this, do this. So if you're not around listening to that, then some things you miss, and you have to be just as committed to this as we are. You know what I'm saying? So, so it's gonna be situations like that, where you just have to really be on point. But I want everybody to just take your profit, man. If y'all don't do anything else in this first month, and it's only one day at a time, man. Let's look at it one day at a time. Tomorrow is gonna be our first trading day of the year, man. Let's all have each other back, right? And take your profit, or you can ask questions. I want you to, and like I said, I'm gonna give y'all. It's a double-edged sword right here. Like if you telling me that, well, damn, it was $100 to get into this trade, and it's up 100%. You just made $100, right? If you don't think you made enough money, because you think that $100 profit is little money, well, then you should have bought 10 contracts. Because then you must got big money. And I look at it like this: if you make $100 in 15 minutes, I know people who don't make $100 an hour, who don't make $50 an hour, So think about it like that. If I made $25 in 5 minutes, and I can keep doing that, that's substantial. But I just want I got some of my traders that I want to see. I want to see more. I want to see winning a lot more and being more consistent and successful. So even if that means taking profit at 30%, like I say, you know what I mean? Because there's nothing wrong with posting a 30% win every day. You know what I mean? Because then you can start ramping that up. Because if let's say you do that, you grab one contract and you just consistently take profit. And again, for people who work, you can set your stop loss. Your limit order. If you paid $100 for the contract, it's simple math, and you can just do it real quick. If you paid $100 for the contract, 30% is just when it goes up to 130, right? So, or you can just set a little threshold so you can set your limit order to sell it immediately when it goes up to 130. There's no reason why you get into that trade and you just see updates in the chat where I'm saying, oh, this play went up 100%, 200%. Like I remember one day we were on Zoom, and Miss Stella, she was on Zoom with us, and the trades were just moving so quickly. She said, hold on, everything is just happening so quickly, and we slowed things down, but the market moves so fast, and she's been able to move and make, and maneuver through the things based off of just following certain rules or whatever. But the thing is, it's still going to be so much more to learn, and especially when you're doing other things. But the open is going to be volatile, and it's going to be fast paced, and it's going to be a lot of variables to you just making money. But you cannot get in that trade and just go back to work without setting a limit order. Now again, I'm gonna go ahead and give you the okay. You can set a limit order and a stop loss at the same time. So you set your limit order, you have it already. Okay, I'm gonna go ahead and set it to just sell this for $130, or just like I'm gonna have it sell it for 150. So I just made 50% because I'm thinking the trade gonna go up anyway to 150 or whatever. I'm gonna go up at least 50%. So let me go ahead and set it for that, and I'm gonna set my stop loss for it to sell it if my contract goes down to $80. So I'm gonna sell it for 20. If I lose 20%, it'll automatically sell it. So if I come back from work, I can't say I lost all my money. You know what I'm saying? Like, we just have to be responsible for that, because it's otherwise, if you're telling me that I just hopped in the trade because you called it out and I can't watch it, and then I went back to work, because I get these DMs all the time, and just asking for things that they can do to be, to make it easier. And I'm like, just the limit orders and stop loss is going to save y'all lives, man. It's like one of the best things that you can get in trading. And it's like, it seemed like training wheels, but the psychological, emotional part of trading is so important, and it's so powerful that it overpowers you, man. I'm gonna tell you, like I said, when I'm up on them contracts, man, I'm like, man, if I had a limit order set to sell them at 100%, or at least sell half of them at 100%, then I'll be fine, because I cannot take it's like, all of us got that in us. There's something in us sometimes, like even if you play video games, because I'm just going to, like, something that you just like to do. Trading shouldn't be like that, but when it's this rush you get when the trade is going in your direction, and you just like, no, I ain't selling it. I'd rather die before I sell it. It'd be just like crazy. You just get those it's crazy, and you get those thoughts. So I use limit orders all the time, because I already know that the psychological aspects, when you're in the midst of it, the thick of it, is stronger than you as a trader. So though, you have to use those stop losses and limit orders. And and then, like I said, the basic things, all of this looks like gibberish to a lot of people. And again, I ain't gonna call no names, nothing like that, or call on anybody to talk. But I told y'all, one of the simplest trade methods to do is to trade off the retest if you're playing puts, because the probability of it going down is higher, at least going back to where it was. So it's like, okay, like if you even look at right here, when it took the reversal here to the upside, if you'd have got that retest here, after this candle closed, it came all the way back down here, So even before you see right here that the price is just in this channel, and it hasn't been able to break this channel, until it break this channel, then, you're good. And that's the thing. So now everything, like I said, every chart tells a story, and this was the story. Now, once it broke out of this channel, that's when everything got active. Like after the 90 EMA at this point, I'm looking at just the trend overall, because there's been plenty of times where it broke above the 90 EMA, but right here, this was the highest point of this particular area. We was in a downtrend channel. Once we got a 222 reversal right here, broke above that downtrend, we retested the downtrend area right here, and it took off. So you got to look at it's trends everywhere on this chart, man. I can draw, and I'm gonna tell y'all, man, it wasn't always this easy for me to look at charts and stuff like this. It took a while, man. They reveal themselves to you, but like, you gotta look. It's always a trend somewhere. It's always a trend somewhere. So you gotta look at where those points. Now and again, we talk about, I like to follow the price action all the time. So it's very important to be able to keep track of when it's moving. This is where the pivot took place here. But like I said, once we broke that downtrend, that showed me. Now again, let's just talk about that for a second. When it broke this downtrend area right here, what that means, just forget what it looks like, but what it means is, it means that the bulls finally got strength to break the downtrend. It was no longer making lower lows. Lower lows. You know what I mean? We got a 222 reversal. It broke out of the downtrend. So now bulls, I'm like, okay, we got more volume to the upside than we had before. And then now we got a retest of the downtrend right here. Broke above the 90 EMA, and we closed above the 90 EMA right there. Even though we didn't stay above it, but we stayed above the downtrend when we had the retest. We retested that. That was great. Moved up, and then we made an uptrend now. Started bouncing off of that. got back above major EMAs, and then the rest was history. So you just got to follow what the price action is telling you in real time. And then you can always go up and obviously look at the higher time frames and see what's going on, because sometimes like I said, the lower the time frame, the higher the emotion. But you go to a higher time frame, it kind of slows things down a little bit for you. It just like gets your nerves together, like, all right, cool, that makes more sense. It's clearer. But it's going to take more data down there because it's coming quicker, but it's not as accurate as the data up here, obviously, right? So this was that 1 o'clock candle here that that we were on. We got this candle, which gave us a reversal. This turned into a 3-1-2 reversal. So that was another bull signal. And if you were just playing this on an hourly, this is where you would have entered. This is the last thing I'm gonna tell y'all. I'm on here, but I'm just trying to set the team up for success, man. And I hope y'all paying attention. So all right. So if you like to play off of like these patterns, right? Like for example, if I see a 3-1-2 reversal here, like, okay, what does that mean? And where do I enter? Okay, so 3-1-2 reversal is the moment this candle right here takes out the top of this candle right here, it didn't take out the bottom. So once it took out the top, it became a 2, because a 2 is a directional candle. A 1 is a neutral candle because it doesn't choose a side. It didn't take out the high of the previous candle or the low of the previous candle. The last candle was a 3 because it took out the high and the low of the previous candle. It engulfed it. You know, so this was a bearish engulfing right here on this candle. It took out both of these on that one. So this was a directional once it took out the high here. And then also we got VWAP right here. So once it crossed this line right here, I'm entering this trade, because what that tells me is if it got through here, it can at least get here. And so my exit would be here. So I'm getting out right here. That's my first exit point, to get out at the top of this candle. So my entry would be here once it break the top of this candle here. So now we got the 3-1-2 reversal. I'm entering that candle and I'm exiting right there. You know, so you can go big on that position, and because you're not standing there for too much longer. Now, obviously, if you grabbed a few, and the funny thing about this is I like this because look, this is the thing. It broke here and it went all the way up there, tested it, and came back down and closed here. So if you got in here, exactly follow the plan and got in right here after it broke above this candle, you don't wait. You go ahead, get in that trade, and you get out here. As soon as it get there, it should be like night and day. If you shoot the general, you know, we use that term, shoot the general around here, like meaning go for it. If you shoot the general, you're not going to stand around and wait for their army to come and get you. You're going to shoot the general and you're going to get out of there. Your mission is complete. You staked out for weeks to shoot the general. You're a sniper. You shot the general, now you go. The plan was to go ahead and get out right here. If you see it rejected right there and came down hard, you lost all of the profit you made. Now you got to wait. Now this could be another entry. So now this candle closed above VWAP now. So I'm entering right there too. And now we got another run. You get what I'm saying? So, and now it looked like and what I'm thinking is, well, what is the target for that one? Where's that candle going? If I'm following the price action, it looked like it wants to fill this gap right here. And that's what it did. It's almost there. It's trying to fill this gap. You know, it was a whole gap down to there, but I'm saying it already filled gap here. There's some remaining gap that is now here, you know, that needs to be filled. What I'm saying is, so immediately, that's why I'm looking at how this finished. Like, all right, cool. If that closed up here, that's what they're looking for. They're looking to fill that gap up here. So you got to just pay attention to what's going on in the market, exactly what's going on. You got to be able to think fast and react, because again, a lot of y'all be profitable, but then lose those profits because you don't take them. You can always re-enter the trade, but you can't always take profits. And that's all I have for today about that. I mean, I did want to hit Meta quickly, if y'all, you know, but I can wait. I can do that tomorrow, or I can do it and I can just post it in the chat or whatever. Yeah, I'll post my Meta update in the chat. I'll do a trade video and I'll just put it in there. I'll record the video and put it in the chat. Yeah, so y'all good? Y'all got anything? Y'all got any questions, any thoughts? Y'all can unmute. I know we went over, but I just felt like we needed to spend a little extra time on the price action, man, and trading them lower time frames. I mean, how y'all feeling?
I'm feeling great. Ready for next week.
Yeah, I feel good.
Y'all good, y'all good. I ain't put y'all to sleep, did I?
Not at all.
Absolutely not.
Okay, yeah.
Oh my god.
Oh, all right.
I feel good to be hearing some stock talk.
Yeah, right. So, but yeah, man, I'm really, I'm looking forward to this week, man. And Ray knows I'm gonna talk to you offline. I'm gonna hit you offline. And, but yeah, I just think, yeah, I'm looking forward to this week, man. I want to see my guy Roman back in action. Quamir, you've been missing in action for a while. I see you back on here. Miss Stella, I know you were working a lot last week. I hope I see you this week too. I want to see a lot of y'all this week, man. And let's get this money. And
Leo, you gonna post your oil update in the group, please?
yeah, he got you. He got us. He got us.
Oh,
He got
wait,
us.
so I'm gonna hit you from my new number.
Okay. Cool. But all right, y'all, man. I thank y'all for joining. I'm gonna be up tonight, looking to see what the Asian futures market do tonight. And again, stay tuned for the updates. And Corleone, shout out to you, man, for getting into that Tesla strangle, also, cause that was solid.
I appreciate it. Yeah, when I heard you break it down, stuff about the delivery.
Okay.
Before it strikes.
Yeah, no, I'm glad you did that. So yeah, I mean, I think that we're gonna see how it plays out, man, because you know Tesla throws a curveball every now and then. But yeah, I want to see y'all this upcoming week, man.
Yes, sir, man. I appreciate it.
Later.
All right, happy 2020. I'll see y'all later.